You make no friends in the pits and you take no prisoners. 1 minute you're up 500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Thanks to ExpressVPN for sponsoring my show. Get an extra 4 months free at expressvpn.com/gold.
The Peter Schiff Show.
Well, I am back in my studio in Puerto Rico. As you can see, winter break is over. Back to work. Seems like all the equipment here is working, and hopefully it stays that way. Anyway, I was going to this evening's podcast about a half hour ago until I realized that Joe Biden was going to be delivering his farewell address to the nation. And so I decided that maybe I want to listen to it, but even if none of you did, I kind of wanted to listen myself. Not really because I really cared too much about what he was going to say, but I did want to react to it and on this podcast. So I listened to about 18 minutes. I think that's about as much as you could get for Joe Biden reading on a teleprompter his farewell address to the nation. I kind of want to sum up what he spoke about. So in case you missed it, there's no point in going to YouTube and watching it. I'm just basically going to give you the clip notes on it. So first of all, Biden began his address by taking credit for the ceasefire between Israel and Hamas that was announced earlier today, including the release of the hostages. I'm not sure of the timetable for the release, but apparently they're going to be released. And Biden took credit for this. Now, I don't think it's a coincidence that Donald Trump is going to be inaugurated in 5 days. And this is when the ceasefire was agreed to and the hostage deal release was agreed. The Biden administration, they've been working on this for I don't know how many months, 6 months, something like that. They haven't gotten anywhere, and now it's happened. So I have a feeling that Donald Trump and his team had a lot more to do with this than Joe Biden realizes. Of course, there's a lot of things that Joe Biden doesn't realize. In fact, there's not many things that he does realize. So maybe he has no idea. Maybe he actually thinks that his team is responsible for the deal, even though I have a feeling it was Trump. I criticize Trump when criticism is due, and believe me, there's a lot of criticism that is due, and I'm going to be criticizing him later in this podcast. But I do want to give credit where credit is due, and it's my feeling that he has a lot to do with this, and there will be some successes during the Trump presidency. Unfortunately, economically, there's going to be a lot of failures, and it's not necessarily because of what Trump's going to do. It's kind of preordained. It's baked in the cake here. There's a serious problem, and it's not just that Trump is inheriting it, because he was president for 4 years, and he helped make the problem bigger, and now he's inheriting a much bigger problem than the one he originally inherited from Obama, and the one that he made worse, despite his claims to the contrary. But anyway, let me continue with talking about Biden's farewell address here. I mean, obviously, it was not like the George Washington address. Of course, it was not televised. That's probably the most famous of farewell addresses. But he began after he talked about the ceasefire. He started talking about the Statue of Liberty, and I thought that's a little ironic because his presidency was very anti-liberty. Liberty is about freedom. And when you're talking about freedom, you're talking about freedom from government. That's what liberty means. And Biden's presidency was all about more government control, bigger government, more regulations, anti-liberty. So it doesn't make sense that he's talking about the Statue of Liberty and everything that it supposedly stands for when he doesn't stand for any of that. He wants government control rather than individual liberty. He also talked about his 50 years of government service as if that was a good thing. That's a problem. Nobody should work in government for 50 years. Biden is 82. So that means he's been in government since he was 32. That's pretty much his entire adult life. And I know he went to law school. And so that's how long is law school? 3 years. He went to college. So he probably didn't even really graduate from law school. I'm guessing maybe 25, 26. So what did he work? Maybe 5 years he spent having an actual job, if that. And then his entire life was spent in government, in Congress, first in the House, and in the White House as vice president, as president. This is not the way it's supposed to be. You're not supposed to be there for life. It's supposed to be a citizen legislature. You go to government for a while after you have experience in the private sector, and then you go back to the private sector, right? Because you have to have some experience in the real world to understand legislation and the impact that it has on the real world. And you should have to live with the regulations that you pass. If you stay in government your entire life, you have no idea what it's like to operate under the rules and regulations that you vote for. But if you actually have to go back to the private sector and live under the laws that you helped pass, well, that's a lot better. I know there was a famous story, I think Hubert Humphrey, I think, wrote about it in his book, because, after he left government, he was a big liberal. I think he opened up a bed and breakfast or something in Vermont. And there was so much government regulation, I think he eventually went out of business because he couldn't handle it. He said, I wish I had better understanding of how rules and regulations work, while I was in Congress, right? Because when he finally left after a lifetime of service and tried to run a small business, he couldn't do it because of all the rules and regulations that he had been passing his entire life, but he had to live and abide by them. But that's why we need to have term. Talk about term limits for Supreme Court justices. That's not where we need it. Supreme Court justices, I don't care if they stay there for a long time. By the time you get to the Supreme Court, you're generally in your 50s anyway, because you got to work your way up. You got to start out as a lawyer, and then you got to get, appointed as a judge, and then you got to get elevated, to the appeals court. This takes a long time. And so, you got to be a lawyer. You got to understand the Constitution and all this stuff and the law and how it all works. So I've got no problem with people who make the law a career being on the Supreme Court. But the legislators in Congress who are writing rules and regulations that are going to apply to private citizens, they need to be private citizens themselves. They need to have experience in the private sector, and then they need to go back to the private sector and live with their own rules. Because if they know they're going to have to be subject to the laws that they pass, they'll be a lot more careful about the laws that they do pass. But if they're just going to live in this fishbowl, exempt from everything that they do, they're more like a royalty, right? It's a nobility that we have now in the United States government. We don't want nobles. We want common men and women. And so, it's a disgrace, unfortunately, that Joe Biden was 50 years. He's in office until he's senile, basically. That's what happened to him.
So he also talked about his accomplishments in his 4 years as president, which, of course, he doesn't really have any accomplishments. These are made up. I mean, the things that he's bragging about actually undermined the economy during his 4 years. That's why the public didn't vote for 4 more. That's why Harris, is, going to be, I guess she presides or does something with the inauguration. But then, she's out of here. Or no, she certified the election results. I forget the role of the vice president, but she's gone, right? And the reason is because the public didn't feel that the Biden presidency was a success. They didn't want 4 more years of that. They wanted 4 more years of Trump. And that's because they thought the economy was better when Trump was president than it was when Biden was president. And so there is no successes. It's all failures as far as I'm concerned. He talked again about the 17 million jobs that he supposedly created. These jobs were the jobs that were there before he became president. All this is the COVID jobs where people left their jobs and then they came back to their same jobs. And Biden wants to claim credit for creating jobs that already existed and that people just temporarily left because they had to, go home and, quarantine themselves for the pandemic. So anyway, then I guess, and one of the last things he did is he managed to get in that climate change is the reason we have the fires in California. And I'm going to talk more about these California fires later in the podcast, but clearly climate change is not the reason for the California fires. They're not even really natural disasters if they're not a creation of nature, right? If the fires are set by arson, or even if they're set by a down power line, that's man-made. It's not a natural disaster. And especially if the main reason that the fires are so big and are doing so much damage is because of incompetence in government. If you've got a government that doesn't manage the forests or manage their water resources and creates this, you can hardly call it a natural disaster. It is a failure of government, not a failure of nature, and having nothing to do with climate change. But I'm going to get into that a little bit later in the podcast. But the first thing I want to talk about is the market's reaction today to what was purported to be good news on inflation. And then I want to talk about the supposed strong jobs report we got on Friday. So 2 key economic reports that I'm going to discuss coming up right after this quick commercial break. So stick around. We'll be right back. Have you ever browsed in incognito mode? It's probably not as incognito as you think. Google recently settled a $5 billion lawsuit after being accused of secretly tracking users in incognito mode. Google's defense? Incognito does not mean invisible. In fact, all your online activity is still 100% visible to a ton of third parties unless you use ExpressVPN. Without ExpressVPN, third parties like your internet service provider, mobile network carrier, or admins of your Wi-Fi network can still see every website you visit, even in incognito mode. ExpressVPN reroutes 100% of your traffic through secure, encrypted servers so third parties can't see your browsing history. It hides your IP address, making it extremely difficult for third parties to track your online activity. It's easy to use. Fire up the app and click one button to get protected. It works on all your devices, phones, laptops, tablets, and more, so you stay private on the go. Ranked #1 by top tech reviewers like CNET and The Verge. I was recently traveling and had to frequently use public Wi-Fi networks. I used ExpressVPN to encrypt my internet traffic and mask my IP address, which allowed me to browse the internet freely and securely. Protect your online privacy today by visiting expressvpn.com/gold. That's ExpressVPN, EXPRESSVPN.com/gold, and you can get an extra 4 months free. ExpressVPN.com/gold. All right. So we got a big rally in the markets today. The Dow was up just over 700 points. That's about 1.6%. Russell 2000 did even better, up 2%. The star was the NASDAQ, up 2.5%. Of course, we had a rally in the bond market as well. The bond market yesterday made new lows and yields made new highs. We had the yield on the 10-year government bond at Treasury at 4.8%, and the 30-year was back at 5%. But we had a rally today, which sparked a rally in the stock market because the government released what was purported to be good news on inflation. right? We got a benign inflation report. We got a report that was better than expected. And by better, I mean lower, right? We got less inflation than was expected. And this is what ignited the boom. We had a big increase in the probability that we're going to get, I guess, a March rate cut now that we got this good news on inflation. Well, what was the good news on inflation? Because the expectation, and this is the December number, so it is the final number of 2024, and the estimate was for an increase of 0.3. And we got an increase of 0.4. What's good news about that? 0.4 is higher than 0.3. Now, the range of estimates was anywhere from 0.2 to 0.4. So it wasn't above the highest estimate, but it was the highest estimate, and it was higher than the previous month. And I think more significantly, if you take 0.4, which is 1 month, and you annualize that, let's say the next 12 months are the same as the report we just got. That's 5% inflation. 5%. That's a big number. That's more than double the Fed's 2% target. So how are we celebrating? Why did Wall Street look at what is a bad number and somehow decide that it was a good number and have a big rally party? Well, it's because the core number, right? And before I get to the core, let's talk about the year over year CPI, which was up 2.9%. That is 0.2 tenths hotter than the year over year from November. So we're moving in the wrong direction. Now, yes, the expectation was 2.9 and we got 2.9, but 2.9 is a long way from 2. Remember, when inflation was below 2 and the Fed was like, oh my God, this is an emergency, we're below target, we need 0% interest rates, we need to do quantitative easing, we really need to get inflation higher. It was like 1.5, 1.6, 1.7, and the Fed was like, that's not enough, we need to get to 2. Well, we were a lot closer to 2 then from the downside than we are now from the upside. So why isn't the Fed equally as vigilant when we're 0.9 away from 2? We're 2.9, right? I don't even know if we ever got as low as 1.1, right? So we're at 2.9. We're almost a full percentage point away from the target. Why aren't they being as aggressive to get inflation down as they were to get inflation up? It just shows you how disingenuous this whole thing is. They're actually cutting rates, when inflation is 2.9, and it's heading in the wrong direction. But, more significantly, forget about what the government claims is happening to prices. I talked about this on the last podcast. Look at commodity prices. Look at the CRB. In 2024, the CRB was up 17%. Does that sound like a year of low inflation when commodity prices as a group were up 17% in the year? And most of those gains happened in the last quarter. In fact, over the last 4 months, which includes the last 2 weeks, which is the first 2 weeks of 2025, the CRB is up 21%. This is a boom in commodity prices. We're up 5.5% so far in 2025, and we're only 2 weeks into the year. This is a big, big move. Oil prices closed today above $80 a barrel. We're up almost 4%, right? Wall Street is celebrating low inflation. At the same time, oil prices are surging by 4%. And that's despite the fact that we got a ceasefire in the Middle East, right? That should have brought oil prices down, but they went up. So oil is going to be booming. I think we're going to be back over 100, maybe by the end of the first quarter. The CRB index was up 1.6% today. It's at a 17-year high. The last time commodity prices were this high was 2008, before the financial crisis. And it took the financial crisis to bring prices down. But the main reason that the CRB is still about 20% below its record high from 2008 is because oil was over $140 a barrel back then. It's only $80 now. Oil's cheap, but it's not going to stay cheap. All prices are going up. So Wall Street is oblivious. These are leading indicators. If you remember, commodity prices really started to boom in the second half of 2020. And I was talking about that on this podcast constantly, how we were going to have a big move up in inflation. Just look at commodity prices. And that's when the Fed was not worried about it at all. It still was worried that we didn't have enough inflation. And then even after we started to see these big jumps in the CPI in 2021, and the commodity prices kept going up, the Fed was saying it's transitory, don't worry about it. And I was saying it's not transitory. Look at commodity prices. They're a leading indicator. And the big increase that we have in commodity prices in 2024, that's not going to show up in the CPI until 2025, this year. So CPI was up 2.9% last year. Now we have soaring commodity prices. So what's the odds that the CPI is going to be up less in 2025 than it was in 2024 before we had this big run up in commodity prices? I don't know if you're paying attention to what's happened in some of these prices. I jotted these things down yesterday or before today's rally. But year over year, cocoa prices are up over 170%. 1 year, 170%. Coffee, 75%. Natural gas, 50%. Wheat, 45%. Sugar and oil, 40%. Soybeans and copper, 30%. Gold and silver up more than 25%. I mean, this is inflation. You know, I looked at a chart of live cattle. Cattle's only up about 15% in the last year, but it's at an all-time record high. Look at that chart. I mean, cattle is going to stampede. I mean, one after another. Look at these commodities. These are incredible looking charts. And what's even more significant is that it's happening with a strong dollar, which is very rare. Normally, you get big moves in commodities when you have a weak dollar because commodities are priced in dollars. So what that means is that if you want to know what's happening to commodities in Europe, in Japan, in Canada, in Australia, in South America, you got to add at least another 4 or 5% to all these numbers. You know, that's why I'm talking about inflation is going to be, running all over the world. In Japan, and I've been talking about the yield on the Japanese government bonds. Well, now the yield on the 10-year JGB is 1.25. We just broke 1%, a month ago, and now we're at 1.25. Look, we're going to be at 1.5. Then we're going to be at 2. And once we break 2, Katie, bar the door, right? Yields are going to spike in Japan because there's a big inflation problem. They just came out just before I did this show with their PPI numbers, and year-over-year producer prices in Japan are 3.8%. Their consumer prices are 3.4%. We're way above 2. Remember, the goal was to get inflation up to 2, and now it is way above 2, and it is heading a lot higher. In fact, if you look at the yield curve in Japan, the yield even on a 20-year Japanese government bond is 2%, and on a 30-year, it's 2.35. That's way below the inflation rate. The yields can't stay down here. Yields have got to go up. They're going to go way up. And of course, the problem is they have a lot of debt in Japan. So what are they going to do about this as they have to finance this debt? They're going to need some significant government spending cuts in Japan. They're going to need big tax hikes in Japan. We need the same thing here. We're not going to get it. They might have it in Japan. Japan can afford it. The people still have a lot of savings. They can pay higher taxes. The government can cut spending. And one thing the Japanese can do that we can't, they're the biggest holder of U.S. treasuries. They can dump those treasuries and use the money to repay some of their own debt, which is what they're going to have to do, right? Nobody's talking about that, but I think you're going to see a lot of treasuries selling out of Japan. But again, the bigger problem, too, is the unwinding of the Japanese carry trade, right? Everybody's been borrowing in yen and buying risk assets around the world, including U.S. treasuries, right? Well, all that stuff is going to have to be sold. You're going to have a global margin call as interest rates really start to go up. people are going to have to repay the yen that they borrowed. And they can't do that until they sell the stuff they bought with that borrowed yen. So I think this is also going to be playing out in 2025 as, inflation is rearing its ugly head, not just in the United States, but all around the world. And that doesn't mean that the inflation isn't the fault of the U.S. government and the Fed just because we're having inflation in Europe and Japan. It's because the Japanese and the European central banks and governments made the same mistakes that we did. And so since we all made the same mistakes, we're all experiencing the same consequences, which is inflation. So, while we're looking at these phony numbers that the government is telling us, right? Oh, the government is telling us that inflation is low, but prices are telling us that inflation is high, right? Who are you going to believe? A biased government or just prices, right? Commodity prices are real. They are what they are, right? The government has a ulterior motive into giving us this kind of spin. But anyway, so let me get back to what was better than expected in the CPI. And that was the core. Now, I'm not making this stuff up. So the expectation was for the core to go up by 0.3. And instead, it went up by 0.2. And the year-over-year increase in the core was 3.2, and it was expected to be 3.3. That's it. So the core was a little bit better than expected, but the overall headline number was a little bit worse than expected. And Wall Street spun this into great news that resulted in this 700-point Dow rally, this 2.5% NASDAQ rally. And if you look at how we got to 3.2, first of all, they rounded down. The actual number is 3.223. So, they got rid of the, almost a quarter of a point. They just, truncated that or rounded it down. So it wasn't really a full 1/10 beat. It was less than that. But the reason for it, there was a, kind of like outlier in that medical services costs went down. Now, that's rare that those costs go down. They generally go up. So you got one off month where they go down. Big deal. We'll probably make it up next month when they go up extra. And then there was a decline in used car prices. And that's kind of a volatile number. Sometimes it's up, sometimes it's down. But that's it. But there's nothing real there, right? Used car prices could just as easily be up quite a bit next month. So it's a statistical non-event. Instead of looking at these, lagging indicators, just look at the boom in commodity prices that was going on today, yesterday, the day before. I've never seen commodity prices rising like this. Gold prices were up about $20 today. We're back at 2,700. Silver had a really strong day, was up about 70 cents. We're up about another dime this evening. We're almost at $31 again. We're at $30.80, so back above 30. Despite that, most silver stocks were down, 1, 2, 3% today. Gold stocks were barely up. Again, nobody wants to buy gold stocks because everybody is so optimistic on the economy because they think everything's going to be great now that we've reelected Trump. Again, everybody is in for a huge disappointment when the problems that got Trump elected get worse after he's elected, right? They were going to get worse anyway. I'm not saying it's Trump that's going to make them worse. It was going to happen, and Trump isn't going to do anything to stop that. But what's happening with inflation is very good for gold. It's very good for gold stocks because it's going to result in a fall in real interest rates. See, everybody is focused on what's going to happen to nominal rates. Is the Fed going to cut? Are they not going to cut? What I'm focused on and what they should be looking at is real rates. Real rates are going to be falling because inflation is going to be rising and the Fed's not going to hike. There's no way that the Fed is going to start hiking during Trump's first term. It's just not going to happen. Could you imagine, what would happen? The vitriol, the rhetoric, what Trump would be saying about Powell if he steps into office and Biden and Powell just starts hiking rates, right? Trump immediately comes in and they start hiking rates. So it's not going to happen. Rates aren't going up. they may hold off on the cuts until we really get a big, collapse in the jobs market. And I'm going to talk about that, after this next break. But we're not going to get hikes. And the fact that we're not going to get hikes when we should get hikes because inflation is going up means real rates are going down. And that is very good for gold. It's bad for the dollar. The markets have got this completely wrong. And that's the opportunity, again, for my listeners to keep buying gold. It's a steal at 2,700. Silver is an even bigger steal at $31. So make sure and contact Schiff Gold and buy before the next big move up. Go to schiffgold.com. You could just fill up your shopping cart and check out, or you could talk to the representatives, and make sure to contact Euro Pacific Asset Management to get these mining stocks, to get into our mining SMA accounts, separately managed accounts, buy the Euro Pacific Gold Fund. I mean, these are the cheapest stocks that I can find. There's a bubble in almost every asset class that you can imagine, right? Including Bitcoin, which is still, hanging out at 100,000. There's a bubble in everything except gold mining stocks. In fact, it's the opposite of a bubble. There's extreme pessimism. Even today, they couldn't get a rally. With a big rally in gold and a big rally in silver, they are giving these stocks away. Nobody wants them. And of course, when nobody wants something, that's when you want to buy it. When everybody wants something, that's when you want to sell it. That's what's going on with a lot of these tech stocks, with a lot of the cryptocurrencies. So you need to be a contrarian if you want to make money in the long run. Anyway, we got a quick commercial break. I'm going to go over some more inflation news and get into the jobs numbers that came out on Friday and a few more things I want to talk about. So stick around. We'll be right back. Fitbot is the upgrade your routine needs. It customizes every workout and adapts as you improve to avoid plateaus on your journey. Fitbot is the upgrade your fitness routine needs. It's like having a personal trainer in your pocket that builds fully personalized workouts, customizes every exercise, and adapts as you improve to avoid plateaus. Unlike many fitness influencers who try to sell you less for more, Fitbot combines the workout planning and tracking you need to stay consistent and make progress on your fitness journey. The app made working out easier by planning my entire workout for me and adapting to my needs, almost like having a personal trainer. I've been able to work out more consistently while traveling. It's so easy to find a quick workout that fits my schedule and requires minimal equipment, which is perfect for when I'm on the road and don't have access to a full gym. Achieve New Year's resolutions and learn new movements the right way with over 1,000 demonstration videos. Level up your workout. Join Fitbot today and get your personalized workout plan. Get 25% off your subscription or try the app free for 7 days at fitbot.me/gold. That's Fitbot, FITBOD.me/gold. While everybody was celebrating the fake good news about inflation, nobody noticed the Empire State Manufacturing Index, which was another disaster. They were looking for a positive number. They didn't get one. They were looking for +1. They got -12.6. I think that's about a 7-month low in the Empire State Manufacturing Index. Look, as far as I'm concerned, all the data confirms stagflation. That is the economy that Trump is being handed. They're talking about in the media, Trump is being handed this great economy, this booming economy from Biden. They're just setting him up for a fall because if everybody agrees Trump is being handed a great economy when it's not great later this year, well, clearly Trump screwed it up. And, also on the producer prices that came out yesterday, we didn't get any good news there, although the headline number was slightly better than estimates. It was supposed to be up 0.2. It was supposed to be up 0.3. It was up 0.2, but the year-over-year headline number was right on estimates of 3.3. But what's more significant is that it was 3% the month before. So sequentially, we went from 3% year-over-year to 3.3. We're going in the wrong direction. We're not going down. We're going up. And we're going to go up a lot more when the boom in commodity prices starts to factor in to the PPI, which will then factor in to the CPI. But where we had a higher number this time was the core. So we celebrated today because the core PPI was 1/10 better Well, yesterday, the core PPI was 1/10 worse, right? They were looking for 3.4 and we got 3.5. So we got a worse number there on the core, right? So inflation is a problem. Right? The Fed should not be cutting at all. The Fed should be hiking. The Fed is completely wrong on their policy. The Fed is pursuing a inflationary, easy money policy. The government is pursuing an inflationary fiscal policy, the most fiscal stimulus we've ever had. We're running more than $3 trillion a year in annual deficits. That is, stimulus. That is Keynesian prompt priming government, the type of fiscal policy you would run in a severe recession, right? That's when the government is supposed to stimulate by running deficits. When we've got all this excess capacity, when we got high unemployment, that's when the Keynesians argue we need to run these stimulative deficits, right? When you have a strong economy, you're supposed to have a surplus to pay off the deficits that you ran up when the economy was weak. We are pursuing stimulative fiscal policy, and we still have stimulative monetary policy. Powell is wrong. They're not restrictive. We never got restrictive. I've already went into that. And the numbers that we're getting prove that. Anyway, I want to go back to Friday's jobs report because there we got another stronger than expected report, which really shouldn't be a big shock because pretty much all the reports come out stronger than expected. I mean, that's just how they do it. Then they revise them down either the next month or 6 months or a year later. They come back and they revise it down when no one's paying attention. But when everybody is focused on the jobs report, they come up with a good number. And the report we got on Friday was the last jobs report of the Biden presidency. So it makes sense that it would be a good one, right? And so it shouldn't be a shocker that it was way above estimates. They were looking for 155,000 jobs, and we got 256,000, right? 100,000 more than expected. Big beat, right? And of course, bonds got clobbered. The dollar went up, gold went down. This is a great number. And of course, they're talking about how this, we had a great Biden jobs, presidency, creating all these jobs. Again, these are phony jobs. These are part-time jobs. These are service sector jobs. Manufacturing lost 13,000 jobs again. So for the entire year now of 2024, we lost a total of 87,000 manufacturing jobs. Those are the good jobs. Those are the jobs we need. The jobs we lost, or the jobs we gained rather, are the jobs a lot of people don't want. They're the jobs that people are forced to take because the jobs they still have couldn't pay the bills because the cost of living went up so much. People had to moonlight. People needed second and third jobs. And again, a lot of these jobs went to immigrants. Now, of course, a lot of these immigrants, Trump is going to theoretically deport them. So I guess those jobs will have to be lost. And I would not be surprised now that Donald Trump is president, whoever was cooking the books at the Labor Department trying to make Biden look good, assuming they're the same people, I don't think they're going to feel the need to try to make Trump look good. So we might finally start seeing some negative numbers on the jobs front, unless, somehow Trump could get his own people in there to do whatever the Biden people were doing. But I don't know that that's going to be the case. So I think we're going to start to see somewhat more honest numbers. And of course, the media is going to waste no time at all in blaming that on Trump. Anyway, I want to talk about some comments that Janet Yellen made. I happened to catch an interview she did. I think it was it CNBC or one of these? She was interviewed by one of these news commentators, and a couple of points she made I thought were worth discussing. One of them was that she kind of acknowledged, almost kind of, she was backed into a corner to admit this, but she said that the massive deficit spending, during the COVID years may have contributed somewhat to the inflation, right, may have contributed somewhat. It caused the entire thing. It wasn't like it just happened, to make a problem that was already there worse. It was the reason for the problem. The deficit spending financed by Fed money printing, that was the inflation. So it wasn't that the deficit spending may have contributed to it. It was it. It was part of it, right? It takes two to tango. And in fact, Chairman Powell actually asked for these deficits. He told Congress, run big deficits, spend a bunch of money, I'll buy the bonds, right? He was encouraging the inflationary fiscal policy during COVID. So it didn't just have a casual incidental effect. That was it. Now, of course, part of it was ordering people not to work, right? That was the other dumb thing they did. At the same time, they printed a bunch of money and gave it to people to spend. They told people to stop producing. All right, well, then, what are they going to buy? You're going to buy imports, right? Or the prices have to go way up because we're producing less stuff. They kept saying, well, the problem is the supply. No, yeah, well, sure, because people stopped working. That was part of the supply problem. But had the government not doled out all that money, there wouldn't have been the demand. So both supply and demand would have come down. And so prices would have been okay. The dumb thing the government did is at the same time, they turned off the supply spigots. They opened up the monetary spigots. And so that's why we had all this inflation. So, she still doesn't understand that. Then the other thing that she said that I thought was rich is, advice to the incoming administration. And her advice was that we need to get our fiscal policy on a sustainable course. Well, yeah, we do. Why didn't you do that when you were Secretary of the Treasury? You've been there for 4 years, and you're saying that it's up to Trump to put the government on a fiscally sustainable course. Why didn't you do that when you were, Secretary of the Treasury? Why didn't you tell your boss, Joe Biden, that we needed to get on a fiscally sustainable course? Why are you telling, Trump to do that when you're not even going to be his Secretary of Treasury, right? So she couldn't tell Biden that we need to be on a sustainable path, but she's willing to give that advice to Trump. And where was she when she was Fed chairman? Why wasn't she telling the Biden administration to get Congress on a sustainable path, right? When she was Fed chair. Why'd she keep interest rates at zero for so long, allowing the government to go further down the unsustainable path? She enabled the very path that she's now saying is unsustainable, and we need to do something about it. Yeah, she's all talk. That's all these politicians right there. They're always willing to talk about what needs to be done, but they're never willing to actually do what needs to be done. Anyway, I want to move forward and talk about the tariffs. A lot more talk about tariffs. Trump was out talking about this new government department agency that he wants to create, right? So supposedly he wants to eliminate governments and departments, but the first thing he's going to do on day one is create a new one. And the new department, or it's not really a department, but he called it one. He wants to create the External Revenue Service, right? We have the Internal Revenue Service that collects the income tax. He says we need an external revenue service to collect the tariffs, because according to Trump, the tariffs are paid externally, right? It's the foreigners, it's the Chinese, it's the Mexicans, it's the Canadians. They're going to pay these tariffs. So we need a new agency to collect these tariffs from the Chinese, which is laughable. We don't need a new agency, and they're not external. They're all collected internally. The tariffs are paid by the importers in the United States, right? The money isn't paid to the government until the goods get here, and they're paid by the importer. They're not paid by the Chinese exporter. They're paid by the U.S. company that imports the products. They send the money to the U.S. government, and then they get it back from Americans by raising their prices. It's the same as the sales tax. It's ridiculous. People think, well, the Chinese companies are just going to absorb the tariff. Well, do you think stores absorb the sales taxes? Do you think they just say, oh, there's a sales tax on this item, let's just eat it? Let's just lower our prices because we don't want the consumer to have to pay the sales tax? Of course not. whatever the sales tax is, they just tack it right on. The same thing with a tariff. There is no difference. They are excise taxes, and so it's not external, it's internal. Donald Trump, again, said that America has been the engine of growth. We've been exporting all this growth to the rest of the world by consuming all their stuff, and now they have to start paying for it, right? It's about time they start paying their fair share because they're not paying the taxes. Americans are paying taxes. They're paying plenty of taxes in their own countries, right? You don't think the Canadians are paying taxes? Yeah, they pay high taxes in Canada, right? They pay higher taxes than we do. They pay Canadian taxes. They just don't pay our taxes. But they're not going to pay our taxes. The tariffs are our tariffs. Yeah, if Canada is dumb enough to retaliate and tax their own citizens because America is taxing its citizens, yes, then the Canadians are going to pay higher taxes. But because the Canadian government tariffs them, not because Trump did it, but he's got it backwards, right? The world is not growing because of our trade deficits. We're growing because of our trade deficits, or we're phony growing. We have a bubble. The U.S. economy is, unfortunately, a service economy, right? Because it's mostly services. Everybody will acknowledge that, right? Manufacturing is small, right? We don't produce much. You remember on a podcast I did not too long ago, I went over all of the goods that we import, all the categories, 80%, 90%, 95%, of stuff that we import, right? The reason that we have a service sector economy, the reason that we can, is because the world supplies us with the goods that service workers don't produce. All the jobs that were created under Biden were in the service sector. We lost manufacturing jobs. So where did we get all these jobs? We got them because we were able to import all the stuff we didn't produce. So our economy depends on those imports. So it's the world that is responsible for our growth. It's not the other way around. And the world doesn't have to pay to subsidize our economy. They're already paying, right? We are exacting a tax on the rest of the world right now by running these trade deficits because goods that could have been consumed by foreigners are instead consumed by Americans, or resources that could have been used to satisfy the needs of foreigners have been used to satisfy the needs of Americans. So we're already benefiting. They're already paying the cost. So Trump has got it backwards. And if we impose these tariffs, yes, it will be harder for foreigners to sell American stuff they can't afford because that stuff is going to be more expensive. But, maybe the tariffs will be like a wake-up call. I heard another person interviewed on CNBC talking about the American consumer. And I think it was a woman. She said that we're the prize that everybody wants, right? Everybody wants access to the American consumer. And so they should have to pay a tariff to get that access, which I'm laughing as I'm listening to this. But why do people value the American consumer? Because we got the dollars. Well, where did we get the dollars? The Fed printed them. But what value do they have? There's no value. Normally, the only reason you export to a country is to import something else. Initially, the reason that Americans were valuable consumers was because we were valuable producers. We produced the stuff that everybody wanted. And if you wanted the stuff that Americans made, you had to make some stuff on your own so you had something to trade. But right now, foreigners are not trading with us because they want our stuff, because we don't make the stuff. They buy the same stuff that from foreigners that we buy. They're trading with us because they want our dollars. Well, what the hell are they? Right? Well, they're the reserve currency right now. So everybody thinks earning dollars is a good goal, even though ultimately the dollar is going to collapse. So we just get to be the beneficiaries. The Fed prints dollars, but the way those dollars go into circulation is through the American consumer. So if you're a foreigner and you want to get dollars that the American consumer has, well, then you sell the American consumer stuff to get dollars. But once the world doesn't want dollars anymore because they realize they're worthless, right? They're just going to keep on depreciating as we keep on inflating the currency supply. Then the world's not going to want dollars. They're going to move away from dollars. And then the American consumer's got nothing, right? We're not going to be some prized possession. We're not making what they need, right? If you're in the service sector, let's say you're a barber You think someone in China cares that there's a barber in the United States? They're not going to fly over here for a haircut, right? So a U.S. barber has nothing to offer somebody in China, right? You got to produce something that you can put on a ship and send to China, right? We're not doing that. We're doing all this service sector stuff. Now, there are some services, sure, that you can export, right? I mean, I guess if you're a psychiatrist and you speak Chinese, you could do a virtual session, right? So there's going to be some services that could be exported, but most of the stuff, the bartenders, the waitresses, what are they doing that somebody in China or Canada, unless you come here on vacation, right? It doesn't do you any good. So the whole thing is going to collapse. People who are thinking that the U.S. consumer is just this great thing, no, they don't understand. It's the producers. The producers drive the economic train. The consumers are at the caboose, right? And if you cut off the caboose, the train could still go. But if you cut off the engine, the caboose ain't going anywhere. And that's the situation in the United States. Now, I also want to talk about the fires, the horrible fires going on in California. I used to live in Southern California for a long time. I finished up high school in the LA area, and then I lived in the LA area for many, many years before I eventually moved back east to Connecticut in 2004. So I spent about 20 years in California, about 4 years in Northern California because I went to UC Berkeley. But the rest of the time, I was in Southern California, mostly in LA, in that area, although I spent about 4 or 5 years in Orange County. But the majority was in the LA. And so right around the area, I have a lot of friends. I have friends that lost their houses in these fires. But I wanted to talk about the economic consequences here. Not so much, on this podcast that's already, running late, so I don't have a lot of time to talk about the abysmal failure of the socialist governments. The socialist mayor of Los Angeles and the head of the fire department. Look, they care more. The head of the fire department, she cared more about virtue signaling than she did about fighting fires. Right? That's all they cared about over there is diversity and inclusion and all that nonsense instead of focusing on protecting Los Angelinos from fires, right? And so this is not just some climate change fluke. This is a complete failure of government and of the government institutions out in California. But I want to talk about the economic consequence. So number one, the fires are still going on. The winds are still blowing the Santa Anas. There's a few fires, 3 or 4 still, mostly not contained. More fires can start up, especially since, people are lighting them, right? Vandalism, which is a horrible crime that should be, as far as I'm concerned, it's not worse than just murder because, obviously people could die and have died. At least I think 25 people are confirmed dead, probably more that they don't know about. But that's still, I think, a relatively low number compared to, how horrific these fires are. I forget how many structures have burned, thousands and thousands of structures have burned. 20,000. I'm not sure what the number is. Obviously, it keeps going higher. But so they're estimating right now maybe $250 billion, 250 billion in losses. This is a huge, staggering number. Could easily be the most costly disaster. Again, I don't want to say natural because it's man-made, but the costliest disaster in the country. Where's the money going to come from to pay for all this? And how is it going to impact the economy? First of all, right, I'm not sure what percentage of the losses are insured because, a lot of insurance companies pulled out of California because the government basically tried to claim, well, cap insurance rates or prevent insurance companies from canceling policies. Well, they just pull out. And in fact, a lot more insurance companies are going to pull out. They've already now passed a law that there's a 1-year moratorium on cancellations or premium hikes. But as soon as that's over, they're going to pull out, right? The whole state's going to be uninsurable. But I don't know what the insured losses are, maybe 20, 50 billion, something like that. Where are the insurance companies going to get that money? Well, they got to sell some bonds. They got to sell some stocks to raise the money, right? That puts downward pressure on bonds, upward pressure on rates. And then what are they going to spend the money on? They got to buy raw materials. They got to buy lumber. I talked on one of my last podcasts. Donald Trump says, "Oh, we don't need Canada's lumber." Sure, we do. We need it now more than ever. How are we going to rebuild these houses without lumber? We need a lot of raw material. We need copper, right? So this is going to put even more upward pressure on raw material prices. It's going to put more upward pressure on rents. Rents are already going up dramatically in Southern California. People have to rent. They're scrambling to rent properties. I have a friend of mine whose house burned down. He rented an Airbnb and that burned down, right? So then he had to go to another one. But so rents are going away. Of course, people are talking about, price gouging. It's not price gouging. It's supply and demand. And some of the people who are renting their homes, the only reason they're renting them is because they can get a lot of money. Some people might say, for that much money, I'll go someplace else. I'll rent out my house. But rents are going up, commodity price. So this is very inflationary. But it's also inflationary because I know that there's a big federal disaster relief bailout coming. Despite what Trump might say, or, we don't like, it's their own fault. It's California. Look, the government bails out voters, even in California, for any natural disaster. It's coming. I'm sure it's going to be at least $100 billion check that the federal government's going to write to California, right, to pay for this. In fact, Biden has already set a lot of these costs in motion, and that's going to be there with Trump. But there's going to be more. Now, maybe Donald Trump will try to put some strings on this. You got to do something about, forest management or control burns. You got to do something with your water. And, they probably won't even do it. Whatever the mandates are, they probably won't even happen. But what's going to happen is the money. Where's the money going to come from? Well, bigger deficits, right? That's where it's going to come from, right? They're not going to appropriate any money. They're not going to raise taxes in order to cover this. They're not going to cut any other government spending. It's all going to be paid for with inflation. And of course, it's going to be disruptive. People are going to lose jobs. People's, place of employments were burned down. And also, where are the workers going to come from to rebuild all these structures, right? Because a lot of these workers were probably illegal in California that were working on the building, and Trump's going to deport them. So you're going to drive up wages, prices. Look, this is all a big negative. Again, you've always got some Keynesians that are going to say, it's going to stimulate the economy because we have to rebuild all the houses. And so we have to rebuild what we already had. It is a net loss to society. There is no silver lining to this cloud. It is all cloud. And any resources that we have to divert to rebuilding the houses we already had has to come at the expense of something else. So we're going to lose something else that we would have had to replace the houses that we already had. Again, it's Bastiat, the broken window, right? If somebody breaks your window and now you have to pay money to replace the window that you used to have, that doesn't help the economy. Yes, it might create a job for the guy that fixes your window, but what about the pair of shoes that you were going to buy, but now you can't afford it because you had to replace your window, right? It's the seen and the unseen. So I can't buy those shoes, so that's a loss for the shoemaker, right? The window repairman makes something, but the shoe man loses something, right? So there's going to be a net loss, and everybody's going to pay higher premiums because these insurance companies, after they pay out all these claims in California, well, they're going to have to raise everybody's rates, not just the people in California. Everybody's insurance rates are going to go up because the insurance companies have to recover what they just paid out. And insurance rates are already going up. In fact, in California, it's again, a lot of people can't even buy homes now. Forget about the mortgage. They can't afford the insurance on the home. Because if you're going to have a mortgage, you need insurance. Now, if you don't have a mortgage, you can take your chances. But if a bank lends you money to buy a house, they require you to have insurance because the house is their collateral. And so if it burns down, they have to know that there's insurance there. And, this is not the end of the wildfires in California. They could get worse. I mean, a lot of these places shouldn't be rebuilt. but they probably will be refilled with government subsidies. Anyway, that's it for today's podcast. Just if you enjoyed today's podcast, make sure and give it a thumbs up, give it a like, leave me a comment. Again, don't forget, we got a lot more good stuff coming this year. We should really have a big year at Schiff Sovereign. A lot of good content is going to be coming your way. A lot of it is free. All you got to do is sign up. So you go to schiffsovereign.com and sign up for the free newsletter. As I said earlier in the podcast, make sure and contact Schiff Gold. Get your gold and silver before this next spike that is coming. I think it's coming soon. And position yourself. The dollar is up. That's a great time to be using those overpriced dollars to buy these undervalued foreign stocks. Value is on a deep sale right now. Nobody wants that. Everybody is chasing the momentum. Everybody expects the good times will never end. Well, the times aren't even good. They're only good on Wall Street. They're not good on Main Street. They're going to get worse, but that is going to spill over into Wall Street. So get prepared before the tide turns. Anyway, that's it. I'll be back again with more podcasts. I'm probably not going to be going anywhere until maybe spring break. And then even then, who knows? I might sit that out and just work all the way through the summer. Not really sure yet what my plans are going to be, but a lot more podcasts are coming your way in 2025. So make sure and tune in and tell your friends. There's going to be a lot of misinformation out there in the mainstream media. People need to know the truth. They need to know what's happening and, more important, why it's happening. And I'm going to be here telling the truth. And so help make sure I have as big an audience as possible. Thanks a lot, and good night, everybody.